In the absence of any action in Sydney, the main news on interest rates today came from Tokyo. The Bank of Japan raised its policy rate to zero from minus 0.1%, where it has sat for 8 years. Now, here's a longer-term picture of Japanese interest rates with today's dramatic hike circled at the end. For the past couple of years, central banks everywhere, of course, have hiked like mad to head off post-pandemic inflation and look sturdily over their spectacles towards Tokyo as the Bank of Japan resolutely kept its policy rate below zero. And guess what? Inflation has come down in Japan as well. As for the Reserve Bank of Australia, the only excitement was in a change in wording from a further increase in interest rates cannot be ruled out to the board is not ruling anything out. Now, you might think that's not very exciting, but it is, because the explicit reference to a rate hike has been removed. Every economist now thinks the next move will be down, although, as you can see from this chart, there is a very wide range of opinions. On the one hand, 6 rate cuts are predicted between now and the end of next year, totalling 1.5%. On the other hand, only one cut of 0.25%. As for the bookies, well, the market odds are coming in a bit from 33 to 15% for a May cut, so not very likely, but it's still more or less 100% for September. The dollar dropped a bit because of that change in wording. The share market closed 0.4% higher, thanks to strong gains by the miners after solid rises in the prices of iron ore and oil today, and a 0.6% rise in New York last night. And that's finance.